Hi, I'm Scott Starratt with Starratt Wealth Management. Well, January and the beginning of the year was met with some optimism as well as some uncertainty, and neither disappointed. If you recall me talking over the last little bit, really spent a lot of time talking about AI technology. And for the most part, the last few months, those particular companies have taken a little bit of a breather. Although, from time to time, depending on earnings and company-specific issues, companies like Meta or Microsoft or Nvidia will outperform. But for the most part, the sector has been pretty flat for the last little bit. On the other hand, commodities have really enjoyed a positive January, with most commodities that we follow, such as gold and oil, being up significantly. And as a matter of fact, they would have been up even more had it not been for the last day of the month, where the gold index, or sorry, the gold price of gold had a significant drop. The price of silver was down in one day, record amount. And so, based on that, there was a great deal of uncertainty about what's going to happen with precious metals. So, like I said, I've talked a lot about AI in the past, so I'm going to focus a little bit more on commodities and, in particular, rare earths and gold. So, on the rare earth side, quickly, our view is that the U.S. has changed the rules. In the past, if you needed, a particular metal in order for manufacturing of a defense item or a technology item, you would just go out and you would find a country that produced it and buy it from that country. The US appears to be more focused on making sure that they themselves have a stockpile. As a matter of fact, the other day they did announce that they were going to have a strategic stockpile of certain materials. Haven't announced what they're going to be yet, but of certain materials, so that, similar to the Strategic Petroleum Reserve in the US, would be used in case they needed these particular metals and they found to be hard to get elsewhere. And so, since the rules have changed, a lot of countries are now looking at ways that they can either cut a deal on critical minerals or, on the other hand, develop their own. Gold's a little bit of a different story in our view. On the gold side, we definitely had two things happening. Won the amount of physical gold, so this is physical gold that's being mined, has been under increasingly higher demand. Places like the Middle East, Asia, Southeast Asia have spent a lot of, sorry, their citizens, the civilians have gone out and they've been buying a lot of, whether it be jewelry, whether it be coins, whether it be wafers or bars, in order to have the hard physical gold. And so that's meant that it's been harder and harder to find physical gold. The other thing that's occurred is that central banks continue to ramp up their gold buying, as best that we can tell and the best that the industry can tell. Places like China and the Middle East are becoming more and more concerned about either the weaponization of the US dollar or the fact that the U.S. is sitting with such a huge trade debt, or sorry, debt, overall debt, and continue to add to it every year through increasing deficits. And so that in itself has become a little bit of a concern. Although there's no real reserve currency alternative in the world at this point, it appears, gold is, for the last little bit anyway, been replacing some of the excess money on the sidelines that these countries are needing for their reserves. So, what do we think going forward? We continue to be cautious on some of the areas of the market as valuations are still high. Again, the economic numbers coming out of the US, it's been almost a year now since Liberation Day, where Trump started all this tariff talk. The reality is the US economy appears to be growing very, very fast. The last numbers coming out of the US show GDP growth at about 4.4%. That is very, very strong. Unemployment, although it has increased a little bit, still is muted. And so, it appears to be what some would refer to as a Goldilocks economy, where things continue to go higher, as far as the stock market and as far as assets go, and the economy continues to tick away. Of course, the biggest concern that a lot of people do have, and this some people would say is another reason on the gold side, is the fact that you're into a situation where you could have higher inflation or inflation come back. So we continue to be cautious, although definitely having more money in gold, energy, and other commodities, we do feel makes a little bit more sense right now. And again, just being a little bit more cautious on the AI technology. Other than that, everything has been very solid. Again, we do expect volatility to continue for the next little bit as geopolitical issues come up from time to time, and the U.S. administration heads into quite a let's say fraught midterm election where the Republican Party is under pressure to get affordability under control. So as always, if you do have any questions, please do feel free to reach out to any one of us here. And definitely, if you do have any or friends or acquaintances that need a second opinion this time, we are at the beginning of the year, so a lot of people do look at their investments, sometimes for the first time or only time in the year. If they do have any questions about what they're invested in, whether it's too risky, whether it's not risky enough in some cases, please do reach out. We're more than happy to add our 2 cents to the conversation.